Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about American Airlines, ticker symbol AAL. Now, to cut straight to the chase, American Airlines is way overvalued. It's not a buy in my opinion, and I want to go through exactly why that is. So in today's video, I'm going to give my price target. I'm going to walk through the issues, and we're going to look at the fundamentals to support that, and then I'll give my final thoughts. All right, jumping into my price target, it's $15 in the next 12 months. Now, when I did my analysis back in November, they're currently trading around $20, and I had a price target of $17. Now that they've gone and traded into that $17 range, I've lowered it down to $15 as they believe they will continue to move lower. Mainly this is due to they are extremely diluted and the fair value is more in the $10 to $12 range. I've been sounding that alarm for probably over 6 to 7 months, and it's mainly because they continue to issue shares, and we'll talk more through that now. Now, moving into shares outstanding, which is really where the crux of where this dilution is really occurring, and this is what I want investors to be honed in on and be aware of if they plan on or are invested in American Airlines. So if you go to the latest balance sheet in September, the company reported 647 million shares outstanding. Now, the reason why that's important is because in March of 2020, there was 426 million shares outstanding, and if we go off of what's on the balance sheet, that's a 47% increase. So they have diluted their shareholders by 47%. Now, if we go what's on macro trends, they report in 721 million shares. If so, that's a 69% increase in shares outstanding. All right, moving on into market cap, and this is where we kind of tie it all together. So in February of 2020, before the pandemic, their market cap was around $11.84 billion. And currently they're trading around 11.21 with 47 to 69% more shares outstanding. Now they're worth about 600 million less, so about 5% less than they were before the pandemic. And one thing to note here is, we'll talk about this further as we go into the fundamentals and financials of this presentation, but the best case for revenues in Q4 of 2021 is only 80% of what they were in 2019. So, and I still think that's a little optimistic. We'll have to wait until earnings, which is on the 20th of this month, to find that out. But that is the real kicker here. So the main question is, why are they the same market cap if the shares outstanding has been increasing? So the things that you'll want to see is revenues increasing, net income above where it is. And from all the signs and all the things that we can see regarding American Airlines, they are not worth this. There is no fundamentals or financials that would support this. The recovery is probably going to take longer than they thought. They thought it was going to run into late 2022, 2023. They have had substantial progress since I first started making these videos on American Airlines. However, with their current valuation and the increase in shares outstanding, they're just not worth what they are currently trading for. All right, moving on over into stock price. Currently, American Airlines is trading for $17.31. And you can see in February of 2020, they're trading around $28. Now, when we take into account the minimum dilution of around 47%, you can do some little bit very, very simple math. If all else was equal, debt, revenue, net income, everything held equal, their business recovers fully, you can multiply that $28 times 0.53, and you get roughly what they should be trading at if you factor in that dilution. And that's somewhere around $14 to $15 a share. And my whole point with doing that kind of exercise is to get your brain thinking about how overvalued and how much that dilution should play into the valuation of American Airlines. All right, so now I'm going to jump into some of the financials and fundamentals, starting off with some of their earnings information. So in Q3, which is back in November timeframe, they actually were able to beat analyst estimates a little bit, I think 2 or 3% on the earnings per share and revenue side. And so that was pretty good news. However, again, at that time, I was saying they were worth about $17 a share. And shortly after, they dropped to that. Not saying because I was right in the short term, I'm always right. But for this particular example, just because they beat earnings on the upcoming quarter doesn't mean they're going to increase. So let's move on to their Q4 expectations, right? So They're expecting negative 148 on a normalized loss on a per share basis. And on the revenue estimate, they're looking at 9.38 billion in revenue. Now in Q4 of 2019, which is what you have to compare them to because it's the last pre-pandemic quarter, was $11.3 billion in revenue. So about roughly 17% of their 2019 revenue are what they are expecting for Q4 of 2021. Now there have been 15 revisions down. That's something, just an interesting note. And then on the earnings per share in 2019, they actually, had 95 cents on the positive there. And I believe in that time frame they were trading around $27 a share. So just something to keep in mind. All right, so jumping into the financials. So in December of 2019, before the pandemic, American Airlines was able to bring in almost $46 billion in revenue, and that had about a 3% year-over-year growth. And you could see that, low single-digit growth for the last 3 years prior. And then going down into net income, you can see that was slowly increasing from the prior 2 years, but it was significantly down from 2015 and 2016. And as we saw in the stock price earlier, the stock price had been dipping, and you can see that net income margin was also failing, and it had kind of stagnated around the 3% range. And currently their revenue is at 24 billion in the trailing months. Now when earnings come out, we expect that to be around 29.6 be the trailing 12 months. And then I went ahead and did some further estimations based off of what I believe their estimates are going to be for future quarters. So we did December of 2021, March of 2022, and June of 2022. So tomorrow when earnings come out, we believe that to be somewhere around 9.3, and that'll bring it up to that 29. In Q1 of 2022, I guess one thing we should go ahead and say is for full year 2022, the analysts have them coming in around $43 billion in revenue, which would be about 95% recovered from this 2019 number, right? So if they're able to make 95% of their revenue that they had previously in 2019, it will be a big pickup from the previous year. So you're going to see what looks like a lot of growth on this revenue side, but realistically, it's not. It's still not going to exceed where they were in 2019. So we're really not going to see growth in 2022. I shouldn't have said 2023. In full year 2022. So on a by quarter basis, so in March of 2022, I'm looking at around 10 billion. The crazy thing here is if analysts are estimating them to get around 43 billion for the total year, they're going to have to bring in at least around 10.75 just in March of 2022. I did that math so you can't see it. About 10.75 billion. So they're going to actually have to raise from mine about $750 million more. And I think that's pretty far off. You can see that between their September quarter and what we're expecting in the Q4, that's only about $400 million, right? And they're hoping this is going to jump from 9.3 to 10.75 or average throughout the year, right? So if it's lower, this number is just going to get higher and higher. So they're going to have to get in these later quarters closer to 11 billion, $12 billion in revenue to catch up on what I don't think they're going to see in the first quarter of 2022. So all that being said is throughout this next year of 2022, you're going to see these percentage of 2019 revenue is eventually going to make its way up to 95% or somewhere around there based off of what analysts have them going. And all that being said is look at the numbers. The margins aren't probably not going to get better. Maybe they made some cost adjustments. Maybe they're doing some things that have helped bring more revenue down to the net income. But my point here is that if they're only going to be making 95% of their 2019 numbers, there's no way they should be valued anywhere close to where they are right now, especially if we're not going to see any growth, for the next at least year, right? That is, in my opinion, a challenge here. And another problem we see with, or at least I see with American Airlines specifically, is they have a huge debt load. And another, no, I just sound like a really bad negative Nancy here, but the other thing with airlines across the board is they're going to continue to struggle with COVID. Now, as I referenced those long-term debt, it has, in my opinion, increased substantially, especially when you're factoring in that the revenue has gone down. So it increased from about 52.3 billion to 59.3 billion, so about 13%, like I said. It certainly doesn't help the case for American Airlines. Now for my final thoughts on American Airlines. Now, a full recovery in the airlines industry at the onset wasn't expected for 2 to 3 years, and where we're at right now, it looks like, at least for American Airlines, they're at least a year out to a year and a quarter, year and a half, based on their current revenue increase projections. Now, when it comes to, they are going to have negative net income for 2021. I think we may see that turn positive in 2022 based off of, I think there are some positive signs there. They do have liquidities, and I think there's no concern there, and they're not hesitant to increase shares outstanding. But that is a negative thing for shareholders overall. Sure, the company stays in business, but it is massive dilution, and it does decrease the value of the shares on a per share value, right? Now, long-term debt, I don't think it's a concern from them being able to meet their debt obligations. It just doesn't help the case for American Airlines as an investment. And then I want to talk a little bit more about the shares outstanding versus the market cap. As you can tell right now, the market cap is extremely close to where they were pre-pandemic. And again, at a minimum, they've increased shares outstanding by 47%. And that is just, again, indicates that the stock is way overvalued, in my opinion. Now, it's not that I hate American Airlines as a consumer, but it's more as a shareholder, right? I can't hold American Airlines. Again, I hold a very small portion of them now. I sold majority of my position in them. I was buying and selling as they were in the $7, $8 range as they would fluctuate. They were a very good name to trade. But as a long-term investor, it's not a very good name to hold. And even in the short term, I'm not sure if the fluctuations are going to play in your favor. So kind of going back to my price target on this, I think it's going to be around $15 in the next 12 months, possibly lower. I think, again, they're extremely diluted at this point, and the fair value could be anywhere from $10 to $12. Now, again, there could be massive spikes in this name. We saw them go all the way up to $30-something, actually sold at that point. I've, again, made lots of money on, well, not lots, I've made decent money on American Airlines thus far. But the point is here, they're not a good investment. They're way overvalued from where they're currently trading. Investors should keep that in mind. Now, this wasn't all inclusive of all the due diligence you should definitely do on your investments, but this definitely is a place to start. Kind of have the brain cells thinking, and for people to think more and go out and do some more research for themselves. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. My name is Frank. Thank you so much for watching.